Hi, everyone. I think we can get started today. So on behalf of everyone at the Financial Inclusion team at Innovations for Poverty Action, welcome and thanks for joining us this morning as we discuss the trends of remittances during the height of the COVID-19 pandemic. I'm grateful for our group of experts that have gathered here today and are willing to share their insights with us all. So we have researchers from the World Bank and the UN Capital Development Fund who are here to share new evidence from Latin America and South Asia on the patterns of remittances, how they've changed in light of the pandemic, with a particular focus on the global shift from informal remittances to sending funds through digital channels. We'll also hear on the impact of these remittances on the households that receive them. So a few housekeeping notes before we start. As our researchers present, please feel free to leave questions in the chat or using the Q&A feature. We'll address these questions either directly in the chat or during the Q&A session after our 3 presentations. This meeting will also be recorded, but only our presenters' names and faces will be recorded. We'll post this recording shortly after the event on our website, and you'll be able to rewatch it or share with any colleagues that were unable to attend. Finally, if you have any issues, you can send a private message to me and I can do my best to address them. So without further ado, I'd like to introduce our first presenters. We have Xavier Ginet. He's a lead economist in the Finance and Private Sector Development team of the Development Research Group at the World Bank. And we have Alejandro de la Fuente. He's a senior economist in the Poverty and Equity Global Practice of the World Bank, and they'll be presenting evidence on Nicaragua.
Good morning, everyone. Good morning to all virtual participants and the co-panelists. And again, it's a pleasure to be here this morning, sharing some of the initial work that we have been doing, so work in progress in Nicaragua around the topic of remittances in times of COVID. So hopefully, we can extract some useful lessons and, with the other panelists and hopefully for the audience. So let me share my screen and get started. So this is, can you see my screen?
Yes.
Great. So this is joint work with Xavi Gine, Lisa Perova, and Arndt Reichert, all bank colleagues at the time. Well, now Arndt is no longer there. It's at the University of Hanover, but this is work in progress with them. And as I said, this is the first first time that we managed to get to present this exciting work. And of course, with big thanks to IPA for funding this work. So let me start with the motivation of why we're doing this work. As you all well know, back in those days when the pandemic sort of started, there were dire predictions by bilateral, multilateral organizations predicting a sharp drop in remittances after the onset of the pandemic, precisely because of the global contraction in activities, in economic activity, and yet the numbers proved those initial predictions wrong. What I'm showing here is actually from it's a graph from one of our co-panelists, Lelis, and she will recognize this. And just to motivate again the fact that you can see there, this is data from central banks in all countries, not just in the region, but also outside the region. And you can see, this comparing the flows of remittances in percentage points relative to the previous year in 2019. So as you can see, Nicaragua in particular is down there in the middle, and you can see that after the onset, which is March 2020, remittances sort of bounced back or started sort of increasing on a gradual and steady basis. And that same trend can be seen across the region, as I said, in Central America, but also in other parts of the world. So, this puzzle of why, despite the predictions and sort of the common consensus across institutions of this predicted drop, we suddenly see a very resilient sort of behavior of remittances across the developing world. So what we're going to do here is going to focus on our key research question has to do with explaining this upsurge in remittances during the pandemic in the case of Nicaragua in particular, which, as you know, Nicaragua is a country that really relies heavily on remittances. Last year we're talking about remittances accounting for about 15% of GDP in the country. More than more than 500,000 households receive remittances on a regular basis in that country. Which is a significant portion if you think that it's a population of about 1.6, 1.7 million households. So again, what are we going to be using to explore this question? Well, two main sources of data. First, we have had a long-term engagement with the main sort of commercial bank in the country, which is Banpro, and which actually has the largest share of market participation on remittances in the country. So we got access to a client transaction level database on remittances from Banpro, spanning from between early 2017 up to February 2021. And this data is very rich. I mean, not needless to say, but it has really transactions on a daily basis, basically, on both remitters and recipients. And this include, of course, among other things, the country from which those remittances were sent, the amounts, and the frequency in which those remittances were actually sent. So among other features within this data set. And then the other source of data which we're going to be pulling to some extent in the analysis, it's a household level telephone survey that was conducted in 4 departments of Nicaragua. And this survey was conducted actually early this year. And basically, it was a purposely designed survey with questions around things that we thought of trying to answer with the initial exploration of the administrative data from Banpro. So, it does have, among other aspects, information about the channels of transmission and, of course, the amounts and the behavior of those remitting households. So, again, this is what we're going to try to be sort of rely on to explore this research question. What I showed you at the beginning was, data from central banks. So when we did this same type of analysis, we actually find that in the administrative data, the same message, which is more remittances and larger amounts were sent right after the start of the pandemic, right? So in this graph, I'm basically showing you, amounts but also the number of remittances, and you can see that remittances have been increasing steadily ever since we have data for this type of household of clients, which is 2017. But there is a dramatic upsurge in 2020, which is the purple line there. You can see that right after starting from April of 2020, both the amount and the number of remittances increased dramatically, and that sort of upward spike kept throughout the year. So that's the main. So again, just reinforcing what we initially thought was the motivating reason for this type of work. So what are the factors that are driving the surge in remittances with the pandemic? So we have come up with the team has come up with 3 hypotheses. One is that remitters somehow managed to weather the adverse effects of the contraction in the host countries in 2020. In the case of Nicaragua, the main 3 remitting the migrant hosting countries are the US, Spain, and Costa Rica. And so, to the extent that those countries experience, quick, recoveries from the pandemic in terms of unemployment and economic activity, or through, fiscal stimulus in the case of the US, that could have helped to some extent these migrants to weather the initial sort of shock at home, and sort of keep their regular flows or increase them if need be. Another hypothesis has to do with the behavior and the exchange rates, right? So. And a priori here, we don't have any strong priors on which way this could go, because both an appreciation or depreciation of the currency could lead to increases in remittances, and I'll explain that in a moment. And then finally, there is this literature suggesting that, of course, the fact that Nicaragua was badly hit by the pandemic is sort of prompting all these altruistic behaviors, for remitters to send more remittances back home. So all these hypotheses, in turn, would apply to the group of migrants or clients that we're looking at the data. And again, we're not yet at the stage of sort of testing all these hypotheses in detail, but this is what the plan is. in terms of the analysis that we're planning to conduct. So on the first hypothesis, this is showing you the unemployment rates for one of the cities where there's a high presence of Nicaraguans in the U.S., which is in LA, in Los Angeles, in California. And you can see there clearly that after the onset of the pandemic, the unemployment rate sort of surged, and that kept ranging in between 13 and 20% all the time throughout the year. But then again, if you see the remittances on the right hand side, the behavior of remittances in terms of the number that was sent, you can actually see that remittances also increased around the same time. Here, zero in this case in the horizontal axis on the left hand and the right hand panel, it's March. So anything after March 2020 is on the right hand side of the figure, and then on the left hand side is before March 2020. So you can see that actually there was not a drop in remittances after the kickoff of unemployment rates in the US. And this is similar to the other countries, especially in Spain. I'm just going to go very quickly. Of course, the unemployment rates were not as high as in the US, but they're kind of similar to those, and you can see the same behavior basically, an increase in remittances right after the pandemic sort of kicked off. And then in the case of Costa Rica, it's a little bit different. And again, the scales might be a little bit misleading, but basically you do see unemployment rates that are higher than in Spain and the US. And the interesting here in this graph is that you could see that the behavior in terms of remittances is actually quite a bit different in the sense that the increase is not as dramatic or as pronounced as in the other two countries. And again, this is just preliminary, but just maybe suggesting that in fact, the higher unemployment rates relative to the US and Spain may have something to explain in terms of the slowdown in remittances sent from Costa Rica in particular. Now, going to the second hypothesis on the currency exchange rates. Basically, as I said, we don't have any priors in which way this could go. If you think about, in these cases, you see a depreciation of the Cordoba against both the US dollar and the euro. And in those cases, of course, migrants might be willing to send more money home because they get more for, more bang for the bucket for each dollar that they send, or the euro in this case. But then you also have the opposite case in the case of Costa Rica, where the Cordoba actually appreciated against the colon, right? And in that case, you would think, okay, if I were a migrant in Costa Rica and I want to keep at least the same flow of money going into my relative's house in Nicaragua, I would need to increase the amount, right? Because of the appreciation that the Cordobas are suffering against the Costa Rican colon. So again, if you see clearly, there is no clear way in which we would expect this to behave. But certainly in a regression type of setting, we will control for this type of effect and try to explain that by country level. And then finally, moving to the third hypothesis, the fact that the COVID-19 pandemic deteriorated the welfare of Nicaraguans, that could have prompted the need for more remittances. And in this graph, we basically did showing a correlation between the number of new cases reported for every 100,000 people in Nicaragua by department, and then in the vertical axis, you see the amount of remittances in thousands. So at least for the case of the US and Spain, you do see some sort of positive correlation in the sense that those departments that are experiencing higher cases contagion are actually seeing an increase in those amounts. Less so for the case of Costa Rica, which basically it's pretty much flat, as you can see in this graph. But again, this is just a way to motivate that potential line of research through altruism, sort of prompting the increase in remittances. Now, all these three hypotheses can be explained, across different types of migrants, right? So, a priori, we don't know what is driving the increase, the upsurge, if this is an extensive or intensive margin question, whether those that were already sending remittances increase the frequency or the amounts, or is it actually that new senders are sort of coming in, and this could be, new migrants that actually migrated out of Nicaragua and then settled in these countries and then started sending out money back home right away, or actually there were some migrants living in these countries already in Nicaragua, in Costa Rica, the US, and Spain, who were kind of dormant, or they were not very active in sort of sending or keeping sending remittances back home. And suddenly, the unusual trigger of this pandemic, which really hit everyone in a dramatic way, sort of prompted these households to behave in a different way and start sending remittances, at least for a temporary period. So again, we need to explain this. And so what we find actually in the data is that non-regular clients are responsible for most of the increase in remittances, while many regular clients stop sending remittances. And again, the way we define regular and non-regular clients is as follows. For non-regular clients, we basically say those that have sent or received money. You have just made one remittance or no remittances at all between the full period, starting from January 2017 up until March 2020, before the pandemic. And by contrast, regular clients, we define them as those that are sending remittances, for that same period, at least 2 or more remittances for that same period. That's it's an arbitrary definition, but at least we think it captures to some extent, these 2 types of groups. And we actually tested, different cutoff points, which can, for lack of time, we're not going to show those here, but we can come back to that if need be in the Q&A session. And so again, if we break, the outcomes, for instance, the number of remittances or the number of clients that are sending those remittances by this distinction that I mentioned between regular and non-regular clients, you do see this, this clear sort of distinction. So in the left-hand side, you have the number of clients receiving money from both regular on the upper panel and non-regular clients in the lower panel. And you see that in 2020, which is the blue line, you see that that dramatic increase in the case of non-regular clients, whereas the regular clients kind of stay very much in the same way in which they were behaving prior to the onset of the pandemic. And on the right-hand side, it's and apologies here for the legends, which we didn't manage to change them on time, but basically it's the same idea of up to 1 remittance is the non-regular clients, which is the blue line, and then the purple line, which is 2 or more remittances, are the non-regular clients. And again, you see that maybe the scale is a little bit misleading here, but we can certainly confirm that it's the same type of behavior observed. Basically, non-regular clients driving the increase in the amount of remittances that have been sent to the country, to Nicaragua. Now we started doing putting a little bit more on the descriptives through regression type of analysis with a different diff, where we have here 2 points in time pre and post pandemic, and basically the same idea, right? So we sort of looking at the behavior of infrequent clients relative to frequent clients, and then controlling for unemployment in the sending country already. So the first thing to notice that, of course, again, this same pattern is clearly shown both in the mean number of remittances, which increases for the frequent clients, and the mean amount of remittances, which increases by about $150 US. The magnitudes are much higher, and they're of course expected in the right direction, which is an increase after the onset of the pandemic. And unemployment is really driving down those amounts and the mean number of remittances, but of course the magnitudes are much lower compared to the frequency or the type of client that are sending these remittances. So again, this is in this type of setting, we're planning to bring in these 3 hypotheses that I mentioned before. So the exchange rate hypothesis, the altruism hypothesis, and of course the unemployment hypothesis also. Disaggregated by type of senders and by countries. I think that's the kind of in the plans for next steps. But one important caveat, or maybe one important note to make here, is that regular clients do stop remitting, but those who kept remitting did see an increase in the amount and frequency of remittances. So basically, this table is showing you what I mentioned before in the upper panel, which is an increase in the number of clients, in this case receiving, but the behavior is very similar to those that are sending remittances, and a drop in regular clients. But if you see on the lower panel, for the regular clients, you also see an increase in the frequency or the mean amount of remittances per month that are sent, and as well as the amount sent per month, right? So for those that manage to stay or kept remitting, they actually do manage to increase the amounts. And so this adds complexity to the picture, but in the end, that's what it is. It's a combination of these two things, but certainly driven by the upsurge of non-regular clients, both in the number of people that are sending and in the amounts as well, and the frequency, which you can also see in the lower panel of this table. Now, one other thing that we have started exploring, and this really comes from the household survey data, is that the search in remittances coming through Banpro does not seem to be explained by switching the sending method, right? So there is this literature, and I think one of the presentations that will coming next, there has been this in some cases it has been explored or suggested that it was not that really there were new remittances coming into the country, just the fact that a lot of people were sending remittances through informal channels, and all of a sudden, the close of the borders, forced them to switch to different sort of methods of sending remittances through formal channels. And of course, central banks capture these trends, and all of a sudden, it appears that this is a huge shift in the trends of remittances. But actually, that might not be the case. So we did explore this question briefly in our household survey, and we don't find any evidence for that, at least in the case of Nicaragua. So what this table is showing you here is that the number of migrants who switched again, to Banpro, as opposed that switched away from Banpro during the pandemic, kind of evens out, right? So in this graph, we sort of grouped the methods of remitting in two big groups. One is through Banpro, and the other one is other methods, right? And these other methods, of course, comprises informal channels, but also outside sort of the network of Banpro through other means, which could also be formal. And you can see there that from those that were sending through other methods pre-pandemic, and then they started using Banpro, that accounts for only 6 households out of 158 households in our sample. But then again, those that were using Banpro and then stopped using that sort of method after the pandemic, it's also about the same number. So all in all, again, it's a small sample, but at least for the case of Nicaragua, it does suggest that this was not by any means the main driving channel of that increase in remittances, a switch from informal to formal sources. So let me just finish by saying a few words on what we are planning to do in the coming weeks and months. And again, I already alluded to some of these points in my presentation. So we are planning to deepen our analysis on the factors that may have driven the surge in remittances. We do have unemployment. We want to look at unemployment dynamics in the main sending countries, and potentially the fiscal stimulus packages in the US, particularly during the study period. For that, we'll try to rely on different sources, including some high-frequency surveys that we have been conducting this year for Nicaragua. And then again, in the setting that I mentioned, this definitive regression, we're gonna be doing this for every month ever since the start of the pandemic, and then controlling for these factors or these hypotheses that were put out there as priors. And we also want to do a little bit more of analysis comparing the Banpro data with the household survey on remittances, which we have. As I said, it's a small survey, not many modules, but certainly the information that is contained there could also lead to some sort of more insights into what we have found so far. And then, a final point, maybe food for thought and for the discussion is, what is the relevance of these findings? And I think certainly from the point of view of Banpro, I mean, for them, really the challenge is how do they keep these clients, right? That all of a sudden they manage to get into their system, and Banpro has a wide portfolio of products, and so they're trying to work as quick as they can to link these flows and these clients to their broader portfolio. And so that's really the challenge, and I think that applies to many other countries which have seen this surge in informal sort of channels of transaction. So let me stop there, and I don't know if my Xavi, who's also joining the presentation, wants to add something to this. Thank you very much.
Thanks. No, I think we're totally out of time. So please, yeah, let's proceed.
Thank you so much. So let's head into our next presentation. And if you have any questions about Alejandro's presentation, please do feel free to leave questions in the chat and we'll address them later. But now I'd like to introduce Lelis Dinarte. She's an economist at the Human Development Team of the World Bank's Development Research Group, and she'll be presenting evidence from Mexico.
Okay, perfect. Thank you. Thank you, Tammy, for organizing this seminar, and thank you for the opportunity to present our work. This project is titled Neither by Land nor by Sea, the Rise of Electronic Remittances During COVID-19. This is a joint project with my co-authors, David Jaume from Bank of Mexico, Eduardo Medina from University of Illinois, and my colleague Hernán Winkler from the World Bank, who is also in the audience. Right, so these are also preliminary results, but we are glad that we can start sharing these results with not only an academic, but also a policy-oriented audience. There we are. So what? Yeah. So what's the motivation of this project? After the implementation of these lockdown policies in response to the pandemic, the different governments around the world and also international organizations, including the World Bank, predicted a massive decline in total remittances. For instance, as of April 2020, we were expecting that the remittances flows from developing countries were going to fall by around 20% during the whole year. And that's how actually this project started, because we were expecting that the remittances were going to fall. Therefore, we wanted to analyze the effects on crime, particularly in Mexico. However, very unexpectedly for us, and also for, I think, everyone in that analyzes remittances, what we found is that formal remittances to several developing countries grew at the unprecedented levels. As you know this figure already, but here, as Alejandro was explaining, what we are showing here is that after approximately May 2020, remittances started growing in different countries, not only in Latin America, but also in other regions in the world, or in other countries in other regions, such as Bangladesh, Kosovo, and Pakistan. Between the 2019 and 2020 period. In contrast, we also use data from household high-frequency surveys implemented by the World Bank in different countries. And for some remittance recipient households in Latin America, they were reporting that they were facing a drop in the remittances they received during 2020. It's important to note that this survey data is actually capturing not only changes in formal transfers, but also in informal ways to remit, since they rely on actual individual responses rather than only on data from electronic transfers or these formal remittances. In that sense, how we can reconcile these two facts. And that's what we are trying to do in this project, in this paper. Our results suggest that the increase in formal remittances is at some point due to the shift from informal to formal ways to remit during the COVID-19 economic crisis in Mexico. We propose that the crisis, the pandemic, just accelerated the process in a matter of days, and therefore it increased the cost of sending and receiving informal remittances to levels that were prohibited, were very, very high. How we do that, how we test that, we exploit the variation by this dramatic slowdown in the crossings across the border, or geographic mobility, that was caused by the lockdowns due to the pandemic. And that made almost impossible to travel and also transport cash or assets from the US to Mexico by land. And therefore, the financial system was the only way that Mexican migrants in the US were able to send the remittances to their families in Mexico. Right, so how we do that? We collected a novel data set from 6 sources. I'll give you more details later. And using that information, we implemented 2 approaches. The first one is a qualitative approach in which we are able to document changes in remittances flows and also migration patterns between the US and Mexico. And second, to test our hypothesis more formally, we implemented a quantitative approach. We use specifically differences in differences designed to compare municipalities that were closer to the US-Mexico border and with those that were farther away before and after or during the COVID pandemic. Our main result is that a 10% increase in travel time to the nearest border crossing reduces the remittances that were received in a particular municipality by around 36% during COVID-19. And that result in particular is robust to different specifications, to other measures of distance, and other to some placebo tests. Given the data we are able to collect, we are also able to rule out some alternative hypotheses, such as the CARES Act, which was a large scale stimulus package that was implemented in the US. And also we're able to rule out the altruism motive using the data that we collected. And finally, we do find evidence of the formalization of remittances. What we find in particular is that there was a larger increase in the relationship between bank accounts that were opened during the pandemic and also remittances in these municipalities around the border. Right, so why are we focusing in Mexico? We, for at least three main reasons. The first one is because the US and Mexico form the largest remittances corridor in the world. And therefore, the relevance of analyzing these changes in remittances is actually very high, particularly for Mexico. Second, because it has been very long being argued that the physical proximity of these the two countries can affect the use of these reformer remittances. There is some qualitative evidence suggesting that, for instance, people usually brings assets or cash through the border instead of or sending it in a more formal or electronic way. And finally, because Mexico has very rich data at the subnational level on remittances, and also the location of Mexican migrants in the US, which allow us to particularly control for several confounding factors that can affect the relationship between remittances and also closeness to the border. Right, so what data we are able to collect? We used 6 sources. First one, our main outcome comes from quarterly reports produced by the Bank of Mexico for the 2013-2020 period. And we have information of the origin and also destination of each of these remittances, or the amount of the remittances, sorry. Then we also have information on we are using a confidential version of the Registry of Mexican Immigrants, the Matrícula Consular dataset. And this is a very relevant, important data set because it provides information or robust measurements of the trends of Mexican immigration that are both authorized and unauthorized in the US. And it's also important to use this confidential version because we are restricting our analysis to employed Mexicans living in the US with ages between 18 to 16 years old. And that's important because we then are restricting our analysis to people that are more likely to send remittances to their relatives or to Mexico. And also to control for the altruism motive, we are including some measures of employment shares, formal employment shares by sector at the municipality level, which was obtained from the Instituto Mexicano de Social Security Administration in Mexico. Fourth, we obtain information from CPS on unemployment of Mexicans living in the US. To test our hypothesis of the distance, we collected information of the addresses of the 50 US-Mexico border crossings and also of the 60 Mexico's international airport. And we geocoded this information and then estimated driving distances. And finally, to test our mechanism, which is the shift from informal to formal way to remit, we use data from the Mexican National Banking and Securities Commission, and particularly wage and transaction accounts at the municipal that were open at the municipal level. So it's important to note that our results, since we only have data at the municipal level, our results are mostly local. So all the inferences that we are doing, or the conclusions that we are generating through this project is at the local level. There may be some effects at the national or more aggregated level, but we are not ruling out or providing evidence at those levels. At the aggregated level, we are just talking about local effects. Right, so using this extensive data set that we collected, we first we conducted this qualitative analysis. First of all, we wanted to test whether there was a change in this relationship between unemployment exposure of Mexican workers in the US with remittances that were sent from the US to Mexico. So in this graph, we are showing that before the first quarter in 2020, that relationship between these two variables, quarterly remittances, which is presented in the blue line, and also unemployment rate of Mexican workers in the US presented in the red line, there was this negative relationship. However, in the first quarter in 2020, despite the unemployment rate of Mexican workers in the US dropped dramatically, remittances did not change. They continued growing. And as Alejandro was saying, there are several hypotheses that have attempted to explain this phenomenon. One is the one that I was mentioning in the introduction, the role of this large US fiscal stimulus package called the CARES Act. Another one, which also Alejandro mentioned, is this altruism motive. There are some incentives of migrants to help their relatives in Mexico, particularly those that were more affected by the crisis. And the third one is the one that we are testing, and that actually we are obtaining more evidence for this one in our analysis, is the acceleration of the formalization of remittances. And in the case of Mexico, as I told you, it's very relevant because of its proximity to its diaspora, which provides a good setting to examine this question. But to examine that question, we need to see we need two elements. The first one is to see migration patterns of Mexicans living in the US, and also whether there was, in fact, a change, like a drastic change in geographic mobility. Let's see whether we have some migration patterns. In this figure, we are showing you that, for instance, migrants coming from the northern states of Mexico during the period 2016-2019 were mostly concentrated in the south of the southern states in the US. When we look at migrants coming from southern states in Mexico for the same period, we are not seeing particularly that pattern. And it's more salient when we separate the analysis by these 6 states from Mexico. We're seeing that, in fact, these 6 states are sending their migrants, or the migrants are deciding to live, particularly in the states that are close to the border, to the US-Mexico border. So there were some migration patterns before the pandemic. Moreover, we also are able to document that there was, in fact, this dramatic drop in geographic mobility. In April 2020, we find that the number of border crossings between the two countries dropped by approximately 70%. Okay, a drop that haven't been seen even in previous periods. Since we have like these two elements, then let's see whether there were some changes or some patterns in terms of the remittances. First of all, let's see. First of all, let's see whether there was a change, particularly in Mexico. We see that when we compare changes in the changes in the growth of remittances in the 2018-2019 periods versus changes in 2019-2020 period, we see that the high intensity increase happened in state or municipalities, in the northern of Mexico. Similarly, when we look at the same changes, but in terms of remittances sent to Mexico, we see that those states in the south of the US, particularly those that are in the border, those that experienced also the high intensity increase in the amount of remittances, or in the change, of remittances that were sent to Mexico. However, a potential concern here is that maybe that pattern happened, or the trend happened in previous year. What we also document here is that, for instance, when we compare previous year to 2020, such as 2017, 18, 19, we did not see that the highest annual change happened in terms of reception of remittances happened in municipalities in the border. However, it did happen in 2020. Similarly, when we look at the trends in the US, we see that in the previous year, there were no particular pattern, in the sense that municipalities in the south were sending more remittances to Mexico, but that's something that we do see in 2020 here. Right, so we are we are able to document these patterns in terms of geographic mobility, migration, like migration patterns from between the US and Mexico, and also these changes in remittances. We tested whether these patterns in remittances in a more formal way using a quantitative approach. We use our empirical framework, was differences in differences, and we estimate this equation, where our dependent variable is the total amount of remittances that were received, sorry, the log of remittances that were received in by municipality M in the period T. And we control by different elements to test different hypotheses. We, first of all, with beta 0, we are measuring the effect or the relationship between remittances and unemployment exposure pre-pandemic period. And then to capture the change during the pandemic, what we are doing is including this indicator here, the CB, which takes the value of 1 if the for any period after or during 2020. Beta 1 is going to capture the change in the trend of this relationship between unemployment and remittances. Beta 2 is going to be our estimated coefficient of interest, which captures this association between the distance or closeness to the border and the effects on remittances post the pandemic, or during the pandemic in this case. And finally, beta 3 is going to capture the altruism motive. Here, ECO-MT indicates, or it's a measure of economic shocks at the municipal level during the pandemic. We are including here all the controls for time in municipality fixed effect and also municipality linear trends. These are the main results as we show here in this table. The increase in here in the post-pandemic period, the increase in 10% of the distance or closeness to the border has an effect of a reduction on the annual remittances received in particular municipality by 0.36 to 35%. That's very stable even after we include, for instance, the control for exposure index, also pre-pandemic, here post-pandemic, and also when we include this interaction, which is accounting for the altruism mechanism, right? So it's more or less, the results more or less stable. It's also stable when we run some additional robustness checks, including, for instance, using the other alternative measures of distance. Also, if we want to control for potential municipalities that were outliers because they were highly dependent on remittances, we dropped the top 5%, and the results are still robust. Another concern that we are capturing not necessarily remittances, but its position to high levels of trade to the US, which is true for those municipalities closer to the border. However, when we control by a measure that accounts for exposition to trade, then we also see that the results are stable. And finally, we don't want to, another compounding factor could be that households closer to the border usually like cross it every day. So people from Mexican can work in the US. So what they are bringing are not necessarily remittances, but wages or work income. So we are dropping the top 5% of municipalities with the largest share of the household to control for that factor. And again, the results are very robust to that specification. Another one that we are not, is one of the table that I did not mention here is that we are also controlling by the infection rates of COVID, also to see whether that was another factor that was explain the results as another measure of potential economic shock, or sorry, yeah, right, so the altruism motive. Right, so far we are providing evidence that distance can be associated to this increase in, or the increase was driven mainly in municipalities that were closer to the border. We're able to rule out that the altruism motive post-pandemic was driving this effect on remittances. And a second hypothesis that we also are able to rule out is whether the CARES Act, which was the large-scale US stimulus package, contributed to the increase of remittances in Mexico. If that were true, then one will expect that the main remittance center states will have benefited more from the fiscal package. However, economic authors document that the replacement rates were not consistently higher among border states, but it was actually very evenly distributed across different states. Second, also, if that were true, we would expect that this increase in remittances was faced only for countries whose diaspora is mostly in the US. However, we are also seeing that increase in other countries whose diasporas are in other developed countries other than the US, for instance, Bangladesh, Pakistan, Kosovo, as I showed in the first figure of this presentation. We tested that formally, and what we did is in our equation number 1, we included an interaction between the COVID indicator and then a measure of CARES exposure, which is a Bartik style instrument similar to the unemployment exposure measure that we used here. And what we are finding is that there are no statistical significant difference here when we use observation, and also when we restrict the sample to municipalities that are not highly dependent on remittances. And finally, the third hypothesis that we are able to test in this project, that we argue that that's the one that's driving the main effects, is the relative financial, or this shift from informal to formal ways to remit. The increase observed in informal remittances could be driven by the decline in informal remittances in favor to electronic transfer through the banking system. If that's the case, then recipient families in Mexico have incentives to open transaction bank accounts so that their families in the US can send the remittances through those means. To explore this, what we are doing is to study the relationship between transaction bank accounts and also municipal remittances to learn how this relationship changed during COVID. All this analysis again at the municipal level. Right, so how we are doing that is through an event study. What we show here are the estimated coefficients of the interaction between a time tummy and also the distance of each municipality to the border. Our dependent variable is the bank accounts. So here, what we can see is that all these estimated coefficients are relative to December 2019, like right before the pandemic or when the lockdown started. So what we can see here is that like the pre-pandemic period, there were not statistically significant difference or effect of this interaction, the distance to the border on bank accounts. However, all the periods, like starting the third month after December, which is around March, we start seeing this decline, meaning that municipalities that are farther away from the border are those that were experiencing a reduction on the new bank accounts openings, or those that were closer were the ones that were facing an increase on the bank accounts open. So to conclude, in this paper, what we are arguing is that there was a sudden acceleration in the formalization of remittances, and which was at some point explained by the increase of observed in several developing countries during the COVID-19 pandemic. What we are seeing is that, or what we are arguing is that due to the lockdown, there was a prohibitive increase in the cost of sending informal remittances, and therefore people started like trying to find new ways to send their remittances to Mexico. Using this subnational data, we show that the increase was driven by municipalities that were closer to the border and which were more likely to receive informal remittances before the offset of the pandemic. And also these areas, which is consistent with our hypothesis of this shift, is that these areas also experienced a larger increase in transaction bank accounts during that period. And while our evidence is not supporting the claim that CARES Act or altruism produced increase in remittances at the local level, we cannot rule out with our data that these other channels, including the appreciation of the peso, as Alejandro was mentioning, for the case of Nicaragua, may have affected these changes in remittances, but at the aggregate. So that's our main result, and thank you for your attention.
Thank you so much. So I'd like to transition to our third presentation. We'll have a presentation by Robin Grafstein, who leads the Data Analytics and Research in Digital Finance and Inclusive Economies at UNCDF, with a specific focus on topics in Asia. He'll be accompanied by Azar Sultanov, who conducts research on remittances and migration data at UNCDF also, with a specific focus on policy assessment. Thank you.
Yes, thank you. And good morning, good afternoon, and good evening. Greetings from Bangkok. Yeah, very excited to see the studies today done in Latin America, and what we hope in the next sort of 20 minutes to offer some insights on Africa and Asia, where UNCDF is actually working directly with the remittance service providers, and so we have harvested quite some data. Our presentation might be slightly different in the sense that we will show some first insights, and we'll cover a range of countries relatively quick, but bear with us, and I hope it's interesting. For those who don't know, UNCDF, which might not be uncommon, we deliver innovative financing solutions with a focus on least developed nations. And in 2020, just before the pandemic started, we actually expanded our remittances and migration portfolio quite a bit with a large program. And I will be addressing the issues of how, say, remittances not just can become faster and cheaper, if we like, but perhaps also how they can help foster a more migrant and gender responsive financial and digital inclusion. And those are kind of exactly the aims of our expanded portfolio, of expanded work. The one word answer to which I'll return a couple of times during the presentation is digitization. And I'll be joined later by my colleague Azar Sultanov, who will give some examples on the policy front. Now, our starting point, if one likes, is actually that financial services don't always work for people on the move. There is a willingness, however, that we also see within the public and the private sector to do innovations and to make remittances more user-friendly for end customers, the migrants and the recipients in developing countries. So our data work, our data and research work that we've set up actually closely works on these two fundamental questions, and we kind of see them as action research questions. So how can we improve a policy on innovation to really ensure that digital remittances reach the last mile? I think low-income people, women, youth, people with a primary education rather than a tertiary education, as we see in many countries, that there is sort of where the digitization is not reaching or and still very much needed. And likewise, to what degree can we really shift from cash to digital remittances to strengthen wider financial inclusion and resilience of migrants and their families? So that's sort of the two main questions that we're working on, not just last 2 years, but also the next years to come. Over the past months, we've interacted with around 12 remittance service providers and set up data collaboratives and researchers with them. We offer them technical support on human-centric design and migrant-centric products and services, if you like. Now, the overall approach, it differs a bit per remittance service provider, but of course it starts always with developing a research use case to map out the data that's already there within the organization, and to do a market scan based on the available information that's out there. We then support these partners with data analytics, so the same sort of transaction data analytics that we've seen in the previous presentation, and disaggregated by sex, by age, by corridors, so to see how different women and men customer profiles and customer segments are behaving. And we're also in the process, and this will happen early next year, to do lean data surveys for around 6 of the partners. There will be around 4,000 surveys that we will collect, both for the women and men senders and receivers end. and qualitative research. So for a number of remittance service providers, we also do focus groups discussions and qualitative interviews in the field. That's all to say, the end goal of that is really to improve a product and a service, and using a migrant and a gender lens in mind. And of course, working in more challenging markets, as we've seen examples from Nicaragua and Mexico. Those are not easy markets to work in. Same for Ethiopia, Myanmar, Bangladesh, Senegal, where we, for example, work. That all having said, right now we have around 4 million anonymized customer data on customers, covering millions of both remittance transactions as well as agents transactions, and we're analyzing and harvesting more information there. So I'll share some first insights. Know that more is to come. That's the last stage that you see here. Knowledge dissemination and learning is very much part of what we do. So in the future, we certainly hope to disseminate more. So one of the things that we were definitely interested in is sort of this whole COVID impact. And if we heard earlier today, COVID-19 seems to have accelerated a shift from cash to digital. And it didn't necessarily decrease the remittances. It differs a bit per corridor, but that seems to be the case. Here we have an example of Bangladesh, and we see here that this were one bank there. We see that in 2018, around 3 out of 4 transfers were in cash. That's the blue part. And that then now that almost flipped. So now 3 out of 4 transactions are digital. And that flip we kind of see happening in 2020, right? So that happens around the lockdown and the COVID pandemic that occurred. We also see that the volumes aren't necessarily dropping for Bangladesh, and we do see that the way that money is transferred is changing. And of course, we know from most of the studies that digital transactions generally have a lower transaction cost. That's one. But beyond that, some of the other things that we are seeing in this specific case for this specific bank, but also for several of the other aid partners that we're looking at the moment, is that once it's digitized, once it goes via e-wallet, those remittances values tend to be lower and they tend to be more frequent. Again, it will differ per corridor. We see, for example, South Korea and Singapore, in this case, are much lower in values. That's where mobile wallet transactions happening. UK as well, Malaysia, Qatar, and Saudi Arabia are still sort of dominated by, well, Malaysia case bank channels in Qatar and Saudi Arabia, also still quite some cash channels. So that sort of also gives to think that there needs to be partnerships, of course, on both sides. We're always dealing with two sides when sending remittances back and forth. This is another example that we've got. This is from the UAE, again, a bank there, where during the start of the lockdown, we saw a rapid increase or spike, if you like, in new account openings, and it was about 5 times the sort of overtime average. So normally 17,000 around average, with some spikes in between. And all of a sudden that jumped to 50 and 60,000 in February 2020. We've also seen that increased the volumes that were being sent, in spite, and also in relation to the previous presentations, that the unemployment rate did of course increase in a country like UAE. Another thing that we see, and we actually see this in both Bangladesh and in UAE, I think it's an important finding, that while, let's say, 5 out of 10 globally, if you like, senders are women, and on the receiving end, in many countries where we've looked around, 6 out of 10 may be receivers. When it comes to these digital transactions, it's nowhere near a 5 out of 10. It's more 3 out of 10 or 4 out of 10 being women, and in some cases like UAE, it's much lower than that. So there's really also a challenge for the private sector in creating value propositions for women and in terms of offering them better digital services. Another thing that's interesting to think about is sort of what then happens once it lands in the country, let's say, right? And what we see, this is a map of Nepal. Now, one of the perceived benefits of digital is, of course, that it can reach more remote rural areas. And we know, especially here in Asia, that there's been this fintech revolution that's going on. And it's not just reaching, let's say, the city here in Bangkok or Singapore or Kuala Lumpur, but also increasingly rural areas in Bangladesh, Africa, of course, with mobile money, and same here in the mountains of Nepal, as we see in this picture. What we've looked at, and this is one of the larger providers in Nepal, when we looked at where the agents are and how much the agents reach of the country, it's around 50%. Mobile wallets have been able to sort of send money pretty much everywhere in the country. There's very few white spots on the right map. And perhaps, and maybe it's a bit of symbolic importance, but I want to share with it anyway. We found about 200 customers who were sending or receiving money from the Everest parks or from the Mount Everest, and there are clearly no agents there. So that can be a massive benefit, if you like, from digital financial services. But perhaps there's an even bigger story here, and that's something that we're looking at, and the previous presentation sort of entered into this as well. We've seen that for those customers who received international remittances, they actually also increased their mobile money volumes. They increased their mobile money frequency. They send more mobile money. So the question is, can remittances lead to increased mobile money usage? And that's something that we're working on with this financial institution, and that seems to be very much the case. So half of their customers who started international remittances didn't use mobile money before, and now they do, and that's on the receiving end. And that's perhaps also a bigger story to the digitization of remittances, and one where we see that women may have a higher stake simply because they are often more financially excluded. Now, in an entire range of financial services, such as domestic payments, deposits, insurance, that is normally not very practical to deliver in a cash-based system, become a viable and an option and a real choice, maybe, in a digital world. It's a lot easier to link a savings to a remittance or to a payment if it's digital than if it's cash, of course. And that's what we're sort of have looked at for Nepal. We're also quite happy to announce or to mention that with IPA and the University of Michigan, we're planning to conduct an impact evaluation on remittances linked financial services and financial inclusion. And this study will be done with BRAC Bank in Bangladesh, looking at remittances linked deposit mobilization by Bangladeshi migrants for the families at home, again, especially women. And we're quite excited about that project, and we'll keep you informed along the way as we move along, as well as some of the other insights that we're getting, of course. With that, I would like to pass the floor to my colleague Azar, who will briefly also present some of our macroeconomic work that we're doing in Sub-Saharan Africa. Azar, over to you.
Thanks, Robin. Can we pass the next slide? Let me discuss some of the potential macroeconomic benefits of digital remittances. Now we know that remittances in most developing countries are much larger than official development aid and even outpace foreign direct investment flows. Studies suggest that the percentage of informal remittances in formal total remittances in Sub-Saharan Africa is as high as between 35 to 75%. A simple back of envelope calculation would then estimate the total remittance market in sub-Saharan Africa to be between 15 to 32 billion US, larger in size, because of the informal remittances flows that are not reported in the official estimated size of 48 billion for 2020. Worth to mention that the surveys of central banks finds that only 70% of remittance receiving countries report the informal remittance estimates. And it's clearly that there is a business and public policy case to digitize and formalize these informal remittances and to measure them more accurately. So digitization or the formalization of flows create macroeconomic benefit because it can foster much needed foreign currency reserves, support balance of payments, improve credit ratings, move money out of the shadow economy to the formal economy, and reallocate capital resources toward more productive and generating wider financial inclusion and economic growth. In 2021, we started, and for 2022, we are now planning to re-estimate informal remittance flows and to measure them more accurately using also high frequency data. UNCDF collaborates with central banks in Africa on regional harmonization of remittance policies as one set of solutions to leverage remittances' full potential to contribute to sustainable development in Africa. As per August 2021, UNCDF has conducted regional diagnostic assessment of existing remittance arrangements and challenges, creating the building blocks of response to improve the current regional cross-border remittance arrangements within the Intergovernmental Authority on Development, IGAD, and Economic Community of Central African States, ECAS, and West Africa to follow. The diagnostic identified several challenges to cross-border harmonization, including high cost, low speed, limited access and transparency, different infrastructure development levels, and lack of interoperability among payment systems within and between countries. Among them, the major issues are identified with the underreporting of formal remittance flows and likely high level of informal remittances. So there is a clear need among regulators for regional and thematic remittance research and support in more real-time monitoring of remittance markets and also measuring the informal flows. We started our estimation exercise with Ethiopia. According to the World Bank, informal remittance inflows to Ethiopia could represent half of the formal remittances. And still, some studies suggest that, and some of them are recent studies, that this underestimates informal remittances and represent only 1/6 of its potential in Ethiopia. So there's various techniques available to estimate remittances, official and unofficial flows. So these techniques include, just to name some, direct micro-level procedures such as surveys on firms and households. And the latest of such survey for Ethiopia carried out in 2010 by World Bank. There is also widely used indirect macro-level procedures, use of indirect data sources based on wide variety of secondary data, including an existing balance of payments items that are not related to remittances, observable economic data, demographic data. We're also planning to include some high-frequency data from remittance service providers and interoperable platforms in Africa, sub-Saharan Africa. So each technique has its strengths and weaknesses, and the choices generally depend on data availability. We use indirect macro-level procedures because the use of estimation based on secondary data is most useful for transactions involving household and individuals when operated through unofficial channels. So they are more challenging to measure directly. Secondary data source can be used to estimate relevant remittance items or to fill gaps when data obtained from direct observation are known to be incomplete. So the objective in using this approach is to analyze the changes in the demand for local currency caused by factors other than the usual economic fundamentals, and to evaluate the portion of the change and the volume that can be attributed to the informal remittances and can be differentiated from the shadow economy or other informal activities in the economy. So as closing note, I just want to stress that gender smart and migrant-centric digital remittances will not happen automatically for people on the move. It requires new ways of thinking, data and research, and collaborations across public, private, and different UN agencies. Above all, migrants will make the shift from cash to digital if and only if we earn their trust and make it worth their while. But if we get this right, remittances are not just cheaper and faster, they're also the on-ramp to a sort of superhighway of full financial inclusion that migrants and their families, especially women, can use to help build the futures they want. Do you have something to add, Robin?
No, absolutely not. No, thanks. And over to you.
Thank you very much. So that's interesting.
Thank you all so much. So we have some questions, and if you have other questions, please feel free to leave them in the chat or drop them in the Q&A and we'll try to address them. But the first question we have is, so we've seen some impacts in your research on financial inclusion, mainly in the adoption of formal financial services. And this is a question for all the panelists, but do you think some of these impacts will be persistent in the long run? For example, in your presentation, Robin, you talked about increases in mobile money usage. Do you think that'll be a sustained outcome?
Yeah, it's a good question. And I mean, there's two things here. First of all, time will tell. As these with the transaction data set, you can obviously capture it at any moment and in any future. So that's quite helpful. What we see is that, generally speaking, if the use case is a strong one, then it's very likely to be so. For example, we're working with a fintech active in the Gambia. They allow for remittances to be sent for electricity bill payments. And that's a very tight use case. So we kind of been comparing those who use electricity bill payments versus those who just use remittances for overall purposes. And we see those are sort of much more loyal, high frequency sending customers. So that is, of course, one. There's, of course, another front. I mean, if migrants continue to lose their jobs for a longer period of time, if the lockdown perseveres, at some point in time, of course, the labor market will not sustain this. Or at least I hope almost that they don't, because if migrants are getting fired and sending their money back to developing countries, one can imagine that's so it's important to monitor this, and this is also where these researchers play their parts. We need to know this because otherwise it remains hidden, and then it's very difficult to implement policies and or products that sort of address that issue better.
Thank you. We have another question in the chat specifically for Alejandra and Javi. So does your evidence show that this created a population of potential senders that stepped up in the pandemic? And to broaden this a little bit, do you think that this evidence has any implications for aid agencies to tractor or factor remittances into needs assessment, especially when we're considering how can we best support aid during an emergency? And I think the latter we can extend to all panelists, but maybe in the Nicaragua context, we can have some insights first.
Sorry, Tammy, I'm not sure I followed the question. Would you mind repeating it?
Yes. So did this create a population of potential senders that stepped up in the pandemic, either due to finding jobs or not having previously needed to send remittances?
Alex, I can try to jump in. So
Okay.
yeah, I mean that's the yeah. So you know, in trying to explain this surge in remittances, what we find is that there's this, you know, sort of older generation of migrants that were sort of dormant, they were not sending anything, and because of the pandemic they started sending. And so yeah, so that's absolutely what we find. We find very little switch in the methods that migrants use to send remittances. So this is not people, so the people that start appearing in the BAMPRO database post-pandemic, these were not sending remittances before in any other form. They were just dormant. And it's because of the pandemic and the severity of and probably because, the families back in Nicaragua, they were saying, hey, please help us, what have you, that they started using remittance. And so actually, as an answer to the previous comment by Robin, will this be sustained or not? Well, I mean, I think it might be. I mean, again, time will tell and the data will tell, but it might just be temporary. I mean, once we go back to a new normal where families in Nicaragua don't need the remittances, then maybe or maybe the current sending families in the US and Spain and elsewhere become tired, then that's going to stop, right? So this is not, again, it's not an adoption of or a switch of methods, at least from what we see in Nicaragua. Lately in Mexico, the case might be somewhat different, but in Nicaragua, it's new guys that are responding to a particular need, which is the pandemic, and again, once things go back to normal, that may stop. But it is so. But sorry, going back to, it is true that yeah, I mean, these guys were, and so from what we know, I mean, these are families that are established now. Maybe they have, the kids are fully foreign. I mean, they're not Nicaragua. I mean, maybe the parents or grandparents were Nicaraguans. I mean, they're older, and so they're now there. They have ties to Nicaragua. They're not super strong. I mean, they're not the sons, but again, they respond to the pandemic, but they may not feel the need to support the family, moving forward. Sorry, did I? Yeah, I hope I answered somewhat the question.
No, I think you did. And then I guess the second part of that is, so we've seen that this kind of has established a population that's very responsive to wanting to support families in a time of need and crisis. And so what takeaway do you think that should be for policymakers as they're considering working on various different interventions to provide aid in an emergency context? Like, what role does this evidence play? Do remittances play more generally?
Wow, that's a tough one.
Very big.
Yeah, no. So actually, what is interesting though is, and again, this might be specific to Nicaragua, but and something that we want to explore. So when you contrast actually these data, the admin data from BAMPRO to survey data that's self-reported, of course, you actually find a lot. So you find a lot of people saying that they don't receive remittances when in fact, before they told us that they did. And that's because, in Nicaragua right now, I mean, there's a bit of turmoil, right? And so, and this might be especially true for families in Nicaragua that have migrants from the US, right? I mean, in Nicaragua, there's a leftist government, and so depending on what kind of data is being used to assess the how important these this coping mechanism, which is the remittances, might be, it's important. We need to understand that people might have incentive to misreport, especially if there's tensions between countries and so on. But also, I mean, it's only a minority of families that have migrants, and to be honest, families that have migrants tend to be better off than other families. So from a social protection standpoint, sure it is true that that remittances can provide a helping hand, but it's we're not talking about the majority of the population or the population that needs it most. In fact, again, a family that might have a migrant is already better off than other families in these areas. I would say that.
I mean, if I can just jump in very quickly, for Nicaragua, I mean, if I understood the second part of the question, it was about also whether, the remittances would crowd out other sources of support to families, formal sort of via public transfers, for instance. I mean, in the case of Nicaragua, the safety net is very small. It's very small, really. So I wouldn't expect that to be the case. If anything, the remittances are just, sort of playing a substitution effect. I'm sorry, they are filling in something that is not coming through the public system, basically. And so it's a crucial source of support for those families that do receive those remittances. But there's really, I wouldn't put that as a risk to any sort of safety net that is currently in place in the country, because it's so small.
Thank you. So another question is, so what do you think the evidence, the takeaway for this evidence should be for financial service providers, especially when we're thinking about designing products and delivering products that can best facilitate these remittances?
If I can jump in very quickly, for the case in Mexico, and based on the evidence that we are providing, I think that one important takeaway will be that the costs are still very important, because if, for instance, if the shift from informal to formal ways to remit is still it's relevant in Mexico, then that shift, or there is demand for these formal ways to remit. Therefore, but it's still very costly, which was in our case proxied by this high cost that was in terms of informally sending the remittances, which is through or by land. So once those that way was shut down, then people start moving to these formal ways. But that cost is implicit in these formal ways to send remittances to Mexico. So in that case, a potential learning or takeaway from our evidence is that we need to, or these financial products providers should take into consideration the cost of sending remittances through formal ways.
Yeah, maybe if I may add as well, I think one of the things that this pandemic has shown, I now remember this really well, a year ago when we sort of launched this program in UNCDF, and all of a sudden in March there was a lockdown, and we did a survey among 88 CEOs and chief executive officers, senior representatives of remittances. This was sent out through the International Association Money Transfer Networks. And we asked them, what will the next 6 months look like? And many of them said two things. They said half of them sort of feared their own financial sustainability at that time. This was March 2020. And they said the only way out of this is by digitizing remittances. So we need to innovate, right? So there was a both positive and negative message. Now we're now almost 1.5 years later, and we see this digital flows, and we see remittances actually in many countries have been stabilized, in some cases increased. That's something that I didn't expect to happen in March. We were holding our breath at the start of our program, like, oh my God, what's happening now? The opposite seems to be the case. So there is an interest in the sector to provide digital remittances. I think we haven't even touched the surface of what we could do with that, because once it's digital, you can link it to a deposit, you can link it to a credit. That's not going to happen in a cash-based system. It's been tried for many years. It is cheaper, generally speaking. The transactions costs are lower. The convenience costs aren't always lower. And that's where it becomes very important to make sure that if digital is here to stay, which it seems, that we onboard, for example, women customers, that we onboard low-income customers, that we onboard people with a primary education, not just people with a university degree, because that's where I think the biggest challenge will come, as we've seen as in many other facets of this pandemic as well, right? Is it generating a digital divide or not? I would say the same thing in the remittances sector may or may not happen. But last point is that there has been this realization, it seems, in the sector also, that their own data can do much more to make these products and services better, and to investigate where the growth markets are and also what the end customer needs. So there's also that sort of almost a revamp in interest in knowing who the customer is to understand the receiver and the sender. And that's something that's actually quite exciting to work with them on. And that's why also I think the group of people that are on the call today, many of may have a research background where we can add the value. Over to you.
Thank you. So we have one final question. So can you discuss a little bit about the impacts on household welfare? So especially when we're thinking about the difference between the on the welfare impacts from informal or manual remittances versus digital remittances. So have you seen any changes on recipient welfare, and especially in the context of resiliency associated with the economic fallouts of the pandemic?
Yes, I mean, I may, so we do have survey data. Now the survey data was collected for an RCT. And so actually the sample of, well, while the original sample is large, the sample of migrants is quite small. But we do have before, after the pandemic, and so we can try to do some diff in diff. I mean, it's not going to be great, but we can say, we should be. Sorry, this is in the to-do list, right? I mean, we can say, yeah, we should be able to say something on that.
Yeah, so maybe, and maybe just so one piece of evidence that we've seen in Nepal is just the increase of mobile money usage after receiving digital remittances. And of course, ask us that question in a year or so again once we've done the impact evaluation in Bangladesh with IPA. But this, I think, is probably the most relevant question, right? I've been surprised to see that one might expect a positive impact of remittances on economic well-being, on financial health, resilience, etc. There's been very few impact evaluations out there. There are a handful. That's I think the next 12 months hopefully will change that a bit.
Right. So unfortunately, in our case, we have not assessed until now the welfare. However, we can use a household survey on income and expenditure from Mexico to try to assess the welfare implications of this shift, and which is something that we're discussing with the Chavi offline for a different question, but that's still in our to-do list, and we have not started working on that. But that's actually a very, very important question.
Lely, sorry, I do have. So again, what we find is the that. So if you think about intensive and extensive margins, a lot of it is coming from the extensive margin, right? So it's new guys that are sending now. Mm-hmm. Is there anything you can say in your data? I mean, so I understand you have aggregate data, but maybe, I mean, so I'm not very familiar with the household survey that you plan to use, but is there any sense that you're going to find people that are just receiving now? Right. Because again, they were, they had relatives across the border, but they were not sending basically because, they migrated a long time ago, but now mm-hmm. given the pandemic, they're starting sending, right? So it's not so much that people were sending all along and before they were carrying it with them when they were visiting, and now they're using the banks because the borders are closed, but rather they were not sending anything and now they're starting to send. And therefore using digital banking services basically. So yeah, anything that you can shed on that would be super useful as well. And just so I mean, we have a sort of a US-Mexico border, which is the Costa Rica-Nicaragua mm-hmm. border. So we can try to see whether what happens there, because I mean that's the closest that we have to your, I mean, of course we don't have, as rich and nice data as you guys have, but we can try to see whether at least, the informal remittances are more relevant for migrants from Costa Rica crossing over Nicaragua, right? Because there was also, they also locked down that border. Now, of course, yeah, I mean, for the US and Spain, of course, there's seas and, a lot of land. So that's not an issue. But for Costa Rica, I mean, it's a situation that's comparable to yours. But sorry, all of that to say that it would be interesting to see whether there's also something going on the extensive margin, rather than, the switch that you guys seem to find.
Thank you, Xavi. Yeah, so right. So we don't have like the separation of who sent the remittance.
Right.
However,
right.
what we do have is, since we created this Bartic style instrument using the Matrícula Consular, and we have characteristics of the migrants, then we can use some of them to try to make a proxy for who is going to start sending remittances at this point from right. We can do that. I'm not sure if we do have all the information because we have gender, age, occupation, etc. So we can explore that with that data and adjust, not necessarily with the remittances, but with these with the unemployment exposure measure.
Yeah, my issue is that, again, given migration patterns, maybe these dormant or these latent migrants that have been there for a long time, but they might be also be closer to the border, right? I mean, that's why go to Michigan if I can just stay in Texas, right? And so you also have a large population of migrants or people that are now American citizens, but from Mexican descent and so they were there and so yeah. So you see what I mean? I mean, it's
yeah.
So I know you're exploiting the distance, but that the fact that you might have this dormant population of migrants might also be correlated with distance, right? I mean, maybe you find that there's a lot more of these guys, closer to the border. Sorry, I guess that's all. Yeah.
No, thank you.
Yeah.
That's very useful. Thank you, Chai.
Yeah.
Sorry to cut off this conversation.
Sorry.
No. So I think we're at it. That's all the time we have. So thank you so much to our panelists and all of our attendees for joining us. I'm very grateful for the rich insights and discussion, and I know I'm really looking forward to seeing where everyone's research goes next. So thanks so much.
All right. Thank you.
Thank you.
Thank you, everyone.
Bye, everyone.
Nice to meet you all. Bye.
Thank you. Cheers.
Cheers.